Tuesday, August 28th. It's a few minutes after 12 o'clock Eastern, around 18 minutes after. And we are here with another edition of Chart the Markets. My name's Mark. I'm from Blundhouse Technical Analysis. And I'm here with my good friends from FEG Token and smartdefi.com. And of course, here with the ongoing support of our exchange partner, BYDFi. And I would ask that you head over to BYDFi.com and enter capital K, 5, capital Z, 4, capital T, lowercase p, and that gets you eligible for our weekly trading bonus draws. Well, actually, we do them every session. We give away two. So if you're a lucky winner, you will know because that will show up in your account. So head over there and get yours now. So here we are, the start of another week, closing in on the end of the year. And here we are looking at a monthly chart of Bitcoin. And we're doing this for a reason. And before we just went live, we were just talking briefly saying, you know, if all of the candles look the same, it would basically mean that they mean the same to us. But they don't. They look different. And in looking different, they tell us different things. And this is over the course of time. When you start to study candlesticks a little bit, you'll realize that not only do the individual ones mean something, but when you put them together in certain orders, they can mean things as well. And there's a lot of real talented candlestick readers out there. I don't consider myself to be one of them. If you're interested, there's a guy by the name of Rob Smith, I believe, and he's developed something called the Strat, and it's all about, you know, how candlesticks print and what they mean, and you know, it's not how I trade, but he's a very good candlestick reader. And then of course there's someone that I have a lot of respect for that I learned a lot from, and his name is Stephen Bigelow. And unfortunately Stephen's passed away, but there's a lot of his information and videos that are still online. And you know, just go to YouTube and you'll find a ton of Stephen Bigelow videos, or you should. And he talks about the T-line. It's where I first started to use the T-line, is what I learned from Stephen. But he was also a very good candlestick reader, And he's written several books and, you know, put together a few handy documents. One of them is called the Major Candlesticks Signals, 12 Signals to Master Any Market. And if you can find that anywhere, I know the guys in my Telegram have it, but if you can find it, it's really good to have. And I always have a copy open on my desk. So that said, what does this week or this monthly chart of Bitcoin tell us? This is the spot chart. It's the Binance chart. It's been around forever. And I wanted to pick the longest time, printing time I could. So here's the monthly. And here we have this candlestick. And I believe we talked about it last week. And although I don't consider myself a candlestick expert, I don't like that candle. And I wouldn't like it on a 5-minute chart. I wouldn't like it on an hourly chart. I wouldn't like it on a daily chart. And I don't like it on the monthly chart. And this candlestick, I believe what you see is called a doji star. And for those of you that might be on a phone or you can't really see this print, upon seeing a doji in the overbought or oversold condition, an extremely high probability reversal situation becomes evident. Overbought or oversold conditions can be defined using other indicators such as stochastics, which of course we use a stochastic RSI, but when a doji appears, it is demonstrating that there's indecision now occurring at an extreme portion of a trend. This indecision can be portrayed in a few variations of the doji. We've talked about the gravestone and so on. There's all kinds. How does this form? This indecision is basically buyers and sellers pushing price up and down into a very, very, very narrow range. And it's appearing at an overbought area. Now, do we live and die by one signal or indicator alone? No, we don't. Just like we don't live and die by a trend line, right? It's great to see it. Sometimes they're incredibly relevant and they can be helpful as a tool, one of the tools that we use. but it's not the only thing we rely on. And I feel the same about this. This isn't going to be the only thing we rely on, but because we like to overlay, we open this toolbox that we have of a very, few relatively easy tools to use. And, candlesticks is all part of that. And this doji would give you reason to pause. That's all, right? Because what we're also looking at is the trend. Is the trend still intact? So here's our signal. Credit to Rico Moneybags for bringing that up last week. But, if all you did back in 2023 was buy Bitcoin at 23,000 when you got a signal, that's all you would have had to do in the last 2.5 years, because you'd still be long. You would have no reason to exit the trade. These are just simply retracements, red candles that held our filter line, which is the T line, and carried on. So it's still a very bullish trend. But pay attention to things. We talk about this all the time. In order to get hit by something you didn't see coming, you need to be looking forward, sideways, and behind. Just like when you're driving a car, right? You got to be looking over your shoulder. And when you're trading over the 20, over the 50, and the 200 would be somewhere down here as well. Like, that's a long way on any time frame from places that might want to pull price back. So we know on smaller time frames, if we were to see this, that we'd be like, okay, whoa down, right? Well, there's something here that we got to pay attention to. So keep this in the back of your mind. Pay attention to stuff like this. This is why you use multiple time frame analysis, which is the fractal part of the three pillars that we use: fibs, fractals, and filters. So look at all the time frames, the short time frames, the long time frames, so that you can actually see, hey, is this an absolute nightmare? Is this price falling, and or is it something else? And we were told here it's something else, right? Because we can read the trend, right? So we can read the trend. We know that we're still bullish, but pay attention to things like this. It doesn't mean it's the end of the world. Here's a similar doji over here, right? Doji at the top of a bullish run gives you reason to kind of go, hey, is there something going on? Right? What hasn't printed here yet is what you see here, right? Where price dips so much that it pulls that 5 EMA down, causing a point and stuff. Like, none of that's happened at this run. This has been pretty much straight up. But pay attention to stuff like this on any time frame. If this showed up on your daily chart, would you be worried about it? Absolutely. You'd be really worried about it. Okay, but here's your daily chart. You just on Saturday got a bullish signal higher. Just to give you an idea, and I think, if you chart watch too much, one of the things you'll start to get an appreciation for is time and how long it takes for a move to materialize. So if we go back to this big red candle from last week, as soon as people start seeing the green one, they're like, oh yay, that's the bottom, time to buy. Was it? No. Because our method of just identifying trend and understanding how price reacts around these two levels of the T line and the 5 EMA, for example, tell us everything we need to know. And we've seen it a million times. It's not like we got to prove it to ourselves each and every Tuesday and Thursday. Impulse down. Did you get a snapback? No. You go sideways where? Back to the T line and or the 5 EMA. Is the trend still down? Is this divergence still in place? Yes. Trend still down. Current price was looking for past price. And when you break a certain level, you find the next level. And that's all that was happening here. This is the 200 finally giving support. And this is key. We talked about this. You want to make sure, because what's the 200? It's our most basic bull bear indicator that we have. And, you know, when you're pulling back, especially with velocity, you really want to make sure that you get support. And you did. So that's a very good thing. A very good thing. Now, here's the 50. And you can see we played around here for a couple days before we were able to kind of get over it, because we would have known that that would have been a logical place for price to pause, knowing that if you break through it on the daily, you're going to look for levels of structure. So here you've got what is that, one just above, just around 117.1. You can line up the tops of these candles, and lo and behold, they kind of align the wicks to the left. So that's somewhat structural, so you know you're going to shoot for that. Break through that, you're going to look for areas where we know price is drawn to, like the upper value range in this case. That's this thin blue line on the volume profile. And then the previous wave's highs. Just one step at a time. And how many times could you have made a mistake trying to long what you thought was a bottom on this daily chart? How many, like, I know there was people out there trying to do, oh, this is the bottom, oh, this is the bottom. And of course they're looking at really short time frames. And everything might look like a bottom if you change your time frames enough times. But it's only a bottom for the blink of an eye, right? If you're working off this daily, if you can't get through this stuff, you're going nowhere. So no, you're not buying bottoms. You're literally trying to catch a falling knife. Don't do that. That's not good for you. But if you're staring at the small time frames, you're going to miss what you really need to see. Right? This stuff is the edge that you need to stay safe. You don't have to overthink any of this. None of it. Let's just take just for a moment. So all that we're left here with is our script giving us our signals, which is the T line, 8 EMA, yellow, and the 5 EMA, which goes from red to white when it senses the in and out of money. I know people were trying to long this because they were telling me about it. And the frustrating thing is that a lot of those people that I know should know better. Like, okay, it was a big red candle, I get it. There's going to be some sort of a snapback, I get it. But what's the trend? Like, if you're trying to long this stuff, that's insane. You're going to get eaten up. Don't fight it. And if you're too scared to sell short because it feels unnatural, that's okay. It'll feel like 2 left feet for a while, but we can help you with that. So that you don't feel as intimidated by betting on the fact that price might drop. Just follow the chart, follow the trend. I know a ton of people that got eaten up in this, trying to long all this stuff, when they should have been on the other side. But if you don't know where the line is, you don't know what side you're really on. It's as simple or as complicated as that. Now, am I going to tell you to short this? Absolutely not. Why? Because it's evident the market wants to go higher. All of this divergence is energy up. Do I want you to long this? No. Unless you're on the micro time frames, there's no reason to be longing any of these candles. And if you are trying to long on short time. Think about what you're doing. If you're trying to long these green candles in a downtrend, whether it be this one or this one to the left, if you're doing that, the probability of you catching the trade that you really think that you really want to catch is almost zero. And I don't get it. Like, I don't get why traders even want to bother pushing water uphill or catching the falling knife, not even realizing that's what they're catching. Saying, oh, I'm not going to buy till there's blood in the streets. Dude, the blood is yours from catching the falling knives, for crying out loud. And you didn't even realize you were standing in your own pool of blood. Just leave this shit alone. If you're trying to long it, wait. The real trades for real money are short. The real trades for real money here are long. Don't fight it. You're not going to curse yourself because you shorted something that you like, or that you shorted something that you believe has a future. Remember something. We're here, we have one job: monetize the chart. That is it. Don't fall in love with anything. It's not going to serve you well. The idea is to have less emotion, not more. So again, please don't try and long these trend moves that are going in the opposite direction. Like, it literally is the definition of insanity. You want to go long? Wait for something like this. Or familiarize yourself on how to sell short, which is no different than long, just upside down. Don't make it harder than it needs to be. Right? Keep an eye on the longer time frames, because these candles on any time frame mean something. Right? Is it the message in the bottle? Is it a precursor to something coming? I don't know. Trend is still bullish on the time frame, sure, but that's an ugly candle no matter what it prints on. So make sure you're paying attention to the longer time frames, because that's the stuff you should be seeing, so that you don't get hit by something that you didn't see coming. Okay? Let's take a look at ETH, because ETH's having a different kind of day than Bitcoin is, and it's been the case quite a bit lately. Not as probably not as pretty, but still same chart, right? All of this stuff that you see here is just telling you this trend is down. These are just green candles in a downtrend. Green candles in a downtrend. And here it starts to look different. This is the candle that gives you the signal to go long, which means this here was your insurance. And you don't appreciate this until after the fact. This is the insurance you pay to make a safe, profitable trade. Now, if you wanted to cheat your signal and try and get an early, yeah, you can do all that. But this is the insurance you're paying to take this candle, which is telling you that's the safe trade. And the idea is you just kind of follow the chart. Now you're on the, now you've got the treasure map in your hand, and you're just going to follow. As long as you're trading on the north side, like you see here, of the T line and the 5 EMA, and price just rides up, then that's what you do. If it becomes indecisive or it feels too dramatic and you want to wash your trade, do that, because you just might get another signal to re-enter. And if you're working off a daily chart or a 4-hour chart, you're not going to chop yourself up in fees like you are on a smaller time frame. Drop your leverage down, allow these trades to run. You don't know what's going to happen. You didn't know what was going to happen when you saw this signal. What comes next? Are we concerned because there's red candles? Yeah. Not really, because they're holding the level that we need them to hold. If they break, like here, or down here, that's a different story. But right now, we're on the right side of the trade. We're on the right side of the trend if you're entering here. Okay? And you guys can throw symbols out or anything that you need today. And Aster, let's look at this thing, because this is a little bit of a puzzle. For all of the talk that it gets, it just doesn't show up on the chart. Now, I get it, everything is green right now, but like the hype, the hype's doesn't meet the chart yet. And I know, Rico, last time we were in here, we're saying, like, is this thing going to give us a signal that maybe it wants to turn the other way? It's, these are tradable moves, yeah, but I mean, that's relatively choppy. But you are getting, a nice clean signal on the 4-hour now.
It still has some work to do, though.
It does. It does. It really does. And what's everybody hoping? If you want to long this, that this is a bottom, you get a nice clean signal, and you start chipping away at all of this, get yourself, above the lower value range, and then, maybe you can take advantage of some of these little gaps, again, and start picking away at past price. But yeah, it hasn't made it. Like, I'm sure it's been frustrating. I haven't been trading it, but I'm sure it's been frustrating if you're thinking that this thing's going to take the catapult route.
Yeah, I got my lesson on it. Like, I made good money on it, and then obviously when the whole wipeout happened, I made profit that day, but I didn't sell all of it, and I got stopped out. And then I did like 2 more trades, because obviously that's how hard-headed we are, right? We want to get stopped out 2 more times before we're like, all right, just let it do what it has to do. And then, like, now I just been watching it, because I've seen these things before where it's like, then when you forget about them, they just start coming back roaring, and then everybody's talking about it again.
Yeah.
And what's interesting is, like, when I started making money off of it, I made money off of it shorting it, because when I saw all the YouTubers talking about it and everybody like on X talking about it, I was like, bro, this thing's toppy as F. Like, everybody's talking about it. I was like, I would probably short it. And my first initial trades were short. They were actually short trades that did really good. But then I started getting into the long side and stuff. And now, like, when you look at it at the higher time frame, it's like, man, none of that stuff should have happened. I should have, and this is where, like, that wipeout was really good, because this is how I came across and, like, really honing in. I got some tickets for us in just a bit as well.
Yeah.
Late last night, I was stood on the phone with my brother. We got some energy sector stuff we'll cover and stuff, but it was the monthly chart zooming out. So, like, I'm looking at Aster, like, on a higher time frame. Like, when I see this thing on a daily chart, and it can print a buy signal, okay, I'll consider it right now, but it still has a lot of work to do. There's that's still a sell signal on the daily chart. So all this positive price action, yeah, it's nice, it's looking better, but it still has work to do.
Well, this is a pretty good example of the power of a trend. Like, and this is where I find it really meaningful to separate this is why we block out the noise, right? Because the narrative says buy, 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 right? The group speak, all of that stuff. But the chart does not. And all of these people that these guys trading that have this kind of buy, buy, buy mentality are getting in a real appreciation for what a trend can actually do and how long it can hold back price.
I appreciate it.
Yeah. This is going to be real painful.
Yeah.
Right. This is,
mine was in the section of the wipeout, so it's like I had that, like, I was trading on a shorter time frame. I was being a little bit degen and stuff. Everybody has those moments. And I was trading off a 1 hour and a 15-minute chart. So if you want to know how degen I was, right? So I was just like chopping away, just gap and go trading. And on these charts, the ebb and flow was easy for me to see and stuff. But once that wipeout happened, it kind of took a lot of that oomph out of it away. And then, on the higher time frame, you're like, man, I could have just shorted it on a daily chart, and I would not even have to play all these games. And that's what made me get into that monthly chart on BTC, and kind of the talks that I was having with my brother last night. He's big on commodities and the energy sector and everything like that. And we were just last night. We spent like 2.5 hours on the phone looking up tickers. I got a sticky note right here full of tickers that we're looking at because we're analyzing on higher time frames and stuff like that. So it was really nice.
Yeah. Here you got this. Listen, if this chart gets some traction off this 4 hour and this turns into a real move, then maybe it's coming at a good place. But again, nothing goes straight up. To your point about it's a lot of work to do still, and I think that's something that everybody forgets. Yeah, you could start something here, but it's going to be a series of moves up, retracements lower, moves up, retracements lower, and a lot of them will make you question yourself.
Thanks.
But it's a process.
Yeah. This 4 hour chart can stay true, and then eventually we see something on the daily chart. I would start to feel a little bit more bullish because I was telling my brother last night about how I was praying on you when you went to that wedding or whatever. I was like, I was sending angels to this guy for him to get back. I was like, I was praying more than usual. And he was like, why? I was like, and I showed him the BTC chart. I was like, because if I had this indicator during the bear market, which I had to live through, I would have just placed a long on BTC at 22K and rode it all the way to 126. You would have looked like Nancy Pelosi, Martha Stewart, and the Rain Man all put together.
Yeah. It's true. This is a 12-hour Vaster. It hasn't printed one yet, but your 4 hour, I believe, has. So this is what you'll try and see for confluence, right? If it sticks on the 4 hour and then prints on the 12 hour, chances are you're going to see it on the daily. If that continues, and that's what then you might be onto something, and you'll be in, because we're using this on a kind of a fractal basis, so you'll be in much sooner than when, like, look, you're in around here. The move that you're going to see on the 4 hour that's representative on the daily won't show up till over here, right? So you're in early, and that's the idea of using the fractal approach, right? And getting confluence on those shorter time frames, like buy signal, buy signal, buy signal, and then when you get to the time frames that are meaningful for the way that you trade, like the 4 hour daily, stuff like that, when you start getting confluence on those, or you could be into a runner, right? And that's what y'all hope for every day. We can find a runner. Speaking of commodities, this is oil. So we're talking about commodities. Let's talk about oil. That's the grand poobah of all commodities, right? The most valuable trade in the world each and every day. So we've looked at this chart before. This is the 50-day moving average. Now, last week, everybody was really excited. Oil was, had a few good days. Really good days, right? A couple percent up, things like that, like meaningful days. And this is why remember we talked last week, it's one thing to hear, the Dow was up 200 points on the news, but what is that on the chart? Did it break the 200? And well, that'd be super bullish. Or did it kiss the 200 and then reject and close 200 up? Because those are two different things. And this is an example of what I'm talking about. So this is oil. We've been following this thing forever. Right? 50-day moving average. Here's everyone's excitement. And what's my feedback when someone says, what are we doing? I said, we're not doing anything until we break through the 50-day moving average. That's going to be, break through that, then we'll have another discussion on what comes next. Is this the first test of the 50 since we broke it? Yes. So there's a little hesitation, right? That didn't blow through the 50. And by the way, that solid blue line, the darker blue line, is our 6166 target that we've hit. That line is still there. Following candle. Now you're starting to see that little point at the top, which is indicating that, hey, there's some selling going on. The point at the top of the 5 EMA. Next candle. That's today. See how relevant what we talk about here actually is? This is a series of just tests and fails. Tests and fails. Test and fail. Test and fail. Do these 3 red candles reverse the trend higher? Not necessarily, because we haven't had that 5 EMA cross down through the T line to change our trend, right? Like, yeah, it's gone red, but has it broken down through it and all that stuff, and is price trading now on the south side? No, not yet. Right? So it's still quote unquote bullish, but you can easily see what's going on, that the 50 is acting as resistance. And based on how we interpret what we see on the chart, you know, if you can see the T line, price is sitting right on it. If it holds the T line, that's still bullish. Like, this could take several days before it triggers a sell signal down. But you know what price is, so you knew that if you failed to 50, we talk about this all the time, what are we looking for? See this gap in here, all this air? This is price being a little too hot. Hits the 50, it's a first touch since breaking it, so there's a higher probability of it failing, and prices come back, closed all this air off, and now here we are. So that's what we're waiting to see. We're waiting to see, geez, how's this candle going to close? Is it going to hold the T line? Is it going to close below it? And how do we see maybe what could be going on? We just break our time frame down. Let's go to the 4-hour. There's our 61.66. That's been our target. Because we're using fractal analysis, if you were trading this, you would be looking at all of these different time frames. It sounds like a lot, but remember something. I'm not asking you to trade 100 things or analyze 100 tickers. We're asking you to select a handful and get to know them intimately. And you'll always have something to trade. You always have something to trade. But just another example that this tool that we're using, and this is just a small part of it, there's a lot more that comes with the script, but this tool that we're using is accurate and works on anything that you want to trade. So you want to trade crypto, we've showed you how it works on crypto. You want to trade commodities, in this case oil, we show you how you can use it on oil. All it's doing is monitoring price, right? It's just tracking price. Here's a buy signal, all this divergence opens up right away. A little bit of hesitation at the 50, because it is the first touch, yes. Pause, then it breaks. Love green candles at the 50. Boom, boom, boom. Just follow the yellow brick road. Price starts breaking those levels. Well, you know what? Maybe it's a little bit tired and it's time for a pullback. A little bit of a retrace. Right? This is the choppy stuff. Probably not interested in trading that. But what you're waiting for is the sign that, hey, you know, maybe there's something going on here. And now you're short. Now, I think this is where a lot of people are giving away their money. 80%, 90% of the trades they make are long trades. And guys, when we first started doing these streams 5 years ago at the beginning of the pandemic, for those of you that have been around that long, do you remember how many people were terrified to even talk about selling short? Now a lot of those people make most of their money selling short because they realize that, hey, they can monetize the chart up and down. So when you hear people say that you can make money in every market, you can, and this is how. Black out all the BS, right? The news, the noise, the this, the that, what everybody's saying, what everyone thinks, what everyone believes, it's all BS. Don't worry about it. Interesting conversation, but it's not going to help you on the chart. Does that help you on a chart? Yeah, I think it does. Does that help you on a chart? Yeah, I think it does. What did we break to try and look for this? Probably what? The 20, right? There you go. Where does your signal appear? Right at the 20. Break one level, find the next. So using our methodology, when you see a signal show up at a major moving average because it's breaking it, winner, winner, chicken dinner. Right? Just more of what you're layering to make sure, or to try and make sure, that you're making a safe, profitable trade. Are we going to be right 100% of the time? No, of course not. That's not a reasonable thing. It is not a thing, period. But we can give you some very useful tools that will take a lot of the angst and a lot of the decision-making stress out of your trading. The stress comes from using too much leverage over too short a time frame. 99% of the time. Okay? So this is US oil again. The 50 was key. And here you can see you're getting support from the 20. This is oil right here, as well as the T-line. It's interesting, you see how you've broken both. Popping back up a little bit, that's more bullish than it is bearish. When you break these levels and stay down there, kind of like you would have happened here, right? Kind of take away. But this is what you're watching on oil. But where do we think it's really going? We're going to skip the weekly for a second. We're going to go straight to the monthly. And let's just put everybody out here. So you got the 20, the 50, the 200, and I've extended the 500 on the monthly and the 1,000, but it doesn't show on the monthly chart. And we've showed you on the daily, going back to September of 23, and we've showed you on the weekly, going back to 23, that why did we believe 61.66 was the number? It was a simple process of, oh, there's a doji, like we talked earlier, at the top of a leg higher. Wow, it's trading above all support, the 20, the 50, the 200. On commodities, I use a 500 and 1,000. That's another story altogether, but that's what's on the chart. That gives me the feeling that it's looking a little bit toppy. That's a very similar doji to the one we showed on the monthly Bitcoin chart. Oh, we broke some levels. Break one level, find the next, and so on and so on and so on. Right? So we show you on the daily and the weekly what it looks like. But we're doing the same thing on the monthly. Broken one level, find the next. Right? Look at how the T-line and the 5 EMA is still diverged, if you can see that. Sorry. If you can see that on the monthly. But we've broken all of that support on the daily. All of that support on the weekly. What's left? This. Oh, that's crazy. That's not going to happen. Really? Well, it's happened before, not just once. Several times. So why is that crazy? Crazy because you're long, or crazy because it sounds irrational to you? It sounds irrational to me too, but you know what? I don't care. Because I have a tool that helps me determine the direction of price. And when we overlay a handful of simple things, what am I looking for? We can start to see, not just do we have a directional take on where price is going, we also start to have an understanding of where its support and resistance levels are also hanging around. So we know that all of this, like you think that Aster chart has a lot of work to do? This is monthly oil, right? Trading below, like everything is, with the exception of this, is above, right? Is all resistance. We're just following price. In September 23, 61.66 sounded batshit crazy. Doesn't make any sense. Supply and demand doesn't support it. This doesn't support it. Inventory's this. Storage that. Tankers this. Don't care, don't care, don't care, don't care, don't care. Blah, blah, blah. Learn how to read a chart and put that knowledge together with all that other analyst stuff, and maybe you got something. But other than that, it's just talk. Price is the only thing that matters. The only thing that matters is price. That is it. And anyone who tries to tell you otherwise probably doesn't have a good relationship with it. The market discounts everything. Technicians believe the market discounts everything. Everything. Makes no rational sense to 99% of the population at the time, when you're a nickel, when you're a hair away from 100, that you hit 60 before 100. But that's what happened, because that's what the chart was suggesting over multiple time frames. You don't just get there looking at one time frame. That's what fractal analysis is all about. We live in a fractal world, whether we like it or not. And that's how we got here. If we don't get here, am I going to be heartbroken? No. It's just, obviously enough money's come in to invalidate the thesis. But until that happens, we continue to hold the same opinion that we held on the daily, materialized on the weekly, is materializing on the monthly. Will that be the bottom? Maybe. Maybe that'll be the point when, it makes sense to be super bullish the commodity itself. We won't know until we get there, because we just don't know what comes after the current candle that we're trading in. Right? That's it. Like, so, the stuff with the commodities is super interesting, especially right now. Look at gold, for example, because of the volatility. So this is a monthly chart of gold, and kind of in, Bitcoin-esque type of, you could have gone back to, January of 23. And even back here, like even in 19, like pretty flat through there, but you do get a clue that there's something going on. And you could have taken one of these.
No, I brought this one up with my brother yesterday, because we were looking at all the commodities, and like I said, I got a bunch of tickers to have some fun with.
Sure.
But I was telling him, I was like, if we would have known Blunt, let's pray over this, man. And when gold was $1,800, the freaking buy signal said to buy it on the monthly chart. You would have looked, how crazy you would have looked, like just placing a crazy long on gold at $1,800, and now it's at 4,000. This monthly chart indicator. And if you guys are listening on X, I'm gonna do this part for Blunt. I'm gonna look out for him. I'm gonna do my influencer part. If you guys can comment on this stream, I know you guys are watching. I'm checking it right now on X. If you guys can comment and share this stuff. If you guys want less panic selling, if you want people, we have to educate each other, right? So if you want people to not just be panic selling, people are panic selling because they don't know what's going on. But if they had this information, all those people were panic selling gold at, $2,500 or $3,000. They were wrong, because on the monthly chart, this buy signal was saying, send it. We're going all the way, Hail Mary it. And we still don't got a sell signal yet on the monthly chart. But it's pretty interesting. $1,800, man, that's a great entry.
Yeah, like even on the weekly, you had plenty of kind of leading opportunity. Now, when stuff's trading flat, no one's excited about it, right? Like no one's talking about it. It's only when it takes off that everyone starts making it kitchen table talk. But there were plenty of opportunities to get into gold early. And even still, like on the weekly, although there's been this huge pullback in price, and this is why we do fractal analysis, right? Fibs, fractals, filters. Let me just flick on So you got the 20 and 50, and then the 200. Remember we were talking last week about how, let's see what happens when it gets to the 50. Right? First touch of the 20. So first touch, since it broke out, gets a little bit of love, 3 days worth of it anyways, and then breaks it. Now, ultimately, price is going to be drawn to the next level down, which is in this case the 50 MA, or because remember, time and price has to come together. So the moving average, regardless of its length, is dynamic and will move. So time and price will meet somewhere, and that will probably be in an area where there's benches of past price. Right? And whether you can catch it in a current wave or you dial it back and look to the left, in this case, because we're at highs, there's nothing there. Right? But we did just what we thought we would do. We broke one level, found the next. I think we're looking for the next. We're still operating under a sell signal. This was obviously toppy up here. And look at these candles. So here's your big impulse down. And again, Rico, we're looking at commodities right now. We looked at gold and oil. But again, these could be stocks. It could be Bitcoin or Ethereum or BNB or Solana. It doesn't matter. The way that we're tracking price, that methodology does not change. So, here's gold, pulls back, finds the 20. Obviously, you can sense here the money coming out, right? You can see it. Close below the T line. We know that's not a good sign. Find the 20. Can't break to the upside. So there's your impulse candle down. You're hoping for a big snapback, right? To kind of come back to where you were. Not happening. Can't break the T line at all. Right? This, when you see this is interpreted more bearish than bullish. Yes, you don't want to trade the chop. Yes, you want to trade the breakout or the breakdown. In this kind of scenario, like you see here, it's more likely to be a breakdown. So you have an impulse to the downside, you go sideways back to the T line or the 5 EMA, and that's where you want to kind of connect, right? That's where you want to enter. And there you go, short again. Boom. This time, you do not hold the 20, and then ultimately you're looking for the next level down.
Yeah, that's what I was breaking down with him. He got to close some trades that was just perfect. He was like, man, I was trying to close them on the 17, and then I was using the ticker, and I was using the indicator and showing him. He was like, look up this ticker, and then look up this one. And he was like, what do you think about this one? And like a lot of them, he actually sold right at the top. I was like, I don't know how you did it without an indicator. I'm over here spending hours. You're just fucking, just doing it willy-nilly. But it was really nice. Yeah, silver was another one that we brought up. And again, on the monthly chart, the daily chart's nice, but the monthly chart, man, it had one heck of an entry. It's kind of wild. And it's like, man, look at that. See, that's nice. A bounce off a major moving average, all the right stuff that you want to see.
This to me, like if I fall asleep at night and I'm going to have a dream, it's going to be with a green candle off the 50. You know what I mean? Like, I love this. Back in here too.
Yeah.
So yeah, that's the one you want.
And it shows you like to trust your chart because you never know which one's actually the one, right?
Yeah.
And that's why I use all these filters and stuff. So like that you can play another day to make sure that you can stay into this and stuff like that. But yeah, this monthly chart is looking good. But I told him on a lot of them, I was like, look at that long wick on there, Yeah, it's looking kind of sketchy. And then when you go down to the daily chart, you can see why you start seeing that selling pressure and what's actually happening and stuff like that. But it's kind of nice to see that, like you were just saying before I hopped on, it was just like, it doesn't matter if it's BNB or BTC, because everything that I was looking at last night with him was all commodities. It was all uranium. It was silver. It was this. It was that.
Okay.
And you could apply it to anything.
We will look at some of those as well. You just reminded me about D-Wave, right?
Yeah, by the way, my friend hit you up.
Yes, I replied to him. Yeah.
Oh, okay, cool.
Yeah. Thank you. Yeah, so here's the D wave chart. You know, and in some respects, it kind of reminds me of Bitcoin, or had the big move down. But even though you've had this price move higher, you notice how you haven't changed the trend,
100%.
right? And
Yeah.
I'm starting to wonder, are you going to do this? You're going to have this kind of move up, failed breakout, and then you kind of come back to the previous wave's low, which would probably
Right
meet
at
the 50 in and around here too.
the.
That's a possibility. But again, a great example, right? These are three candles with up some upward movement, but the trend hasn't changed. And that's why all of this kind of getting in before you know the direction of the trend, especially after an impulse move, there's an element of risk to that.
Huge element.
Yeah.
I mean, it's huge. It's huge because you're acting off the impulse is pure emotion, right? So you're seeing all this stuff going on. It's like you want to just chill because look at that daily buy signal on this D wave. That was amazing down there.
Yeah.
You know, in way before. And now that I've been looking at the monthly chart, I wonder what the monthly buy signal was at for D wave. It doesn't even have one. That's
There
how
you
good it is. Okay, there you
go.
go. I
Uh,
mean,
the week of November 1st.
yeah. I mean, check
Or
that
the
out.
month
Martha
of November
Stewart
1st,
has,
yeah.
yeah, Nancy Pelosi has dreams about being able to enter like this, and this is a perfect example how powerful this indicator is, and sometimes like,
Dude, that
when
was
the
less
markets
than
are
a
really going,
dollar.
yeah, yeah, crazy, yeah, that's a seven-figure bag. I mean, they got knocked out the park with my friend right there. So, I mean, he got in at like $6 and stuff, but I mean, look at we would have had this indicator early on. That would have been amazing to have this indicator super early because, you could zoom out, get a lot of the noise out, and really, knock some of these trades out the park.
Yeah, no, that's amazing. Good for him. But you know what? When you're so if you have this at your disposal, um, having things visually make a difference, right? And if you just spent your time looking at monthly charts, like we just showed, finding stuff that's maybe coming out of a period of consolidation. Wow, like if you're an options trader, that's money. That is money. Let's look at copper here for a second. Probably not going to like the volume profile. Oh, it's okay with it. Whoops. Did you ever do that? Forget you've changed your thing and you start drawing all over your chart. So, that's what I just did. Okay, so copper, like the metal that everybody loves to steal. Um, wow. So we all know what that was from, right? That was a legislative thing. Dumps the price of copper. So there's your impulse down. Remember, so this is a daily chart of commodities. It looks like a 1 minute chart of a shitcoin at this point. So you got massive impulse down and all this sideways stuff. There's nothing here, right? Everyone wants to buy the bottom. That's fine, but how long do you want dead money? The trend was still down. This is the edge in such a simple tool that can take someone who's struggling to get on the right side of trades, and then of course have the ability to manage it once you're in it. Right? This is dead money. There's basically 2.5 weeks of trading days in there, maybe a little bit more. So when you have a tool to kind of manage what you're thinking and help support maybe the thesis that you have currently, doesn't matter what you're trading. We know in here that coming out of this impulse, you start seeing those dojis that are going nowhere, you're going to wait because there's no reason to be long yet. No reason to be long, no reason to be long. Okay, let's have a conversation right now. Right, there you go. That's when you might want to consider going long, because the market said, hey, there's an opportunity there. There's your 200 MA. You know that's going to be a little bit of resistance, right? Did you lose trend? No. Still didn't lose trend. I know this is going to be really tough to see, and I hate doing this because it rasters the chart a bit, but follow the chart, follow the chart, follow the chart. That divergence is in place, you're okay. I get it gets a little sketchy when it tightens like that, but until you're flashed the signal to tell you to get out, you're all right. Look at the support you're getting from the 20. So, does your heart get broken because you close below the T line? Well, maybe it shouldn't, but look, there's the 20 saying, hey, it's okay, I got you. Right? Bam, big green candle. Breaks the 50. Look at, now you got momentum in your move. This, a little sideways stuff, yes, but you're holding trend. Now you've got the momentum. See that divergence? It's an obvious difference, right? And you just ride that thing until it tells you not to. Where do you find this kind of flattening out the resistance again? Where? Point of control, or sorry, the upper value range on the volume profile. Look, nobody wants to take it past that level. So what do you decide to do? You know, ding dong, can Sally come to the dance? No. Can Sally come to the dance? No. Flowers and chocolate, flowers and chocolate. You just got to go back until you can get above this level. And we're still trying. Another signal off of the 20. I like, if you can get them where there's support, that's great. Doesn't matter the time frame. And let's look what our volume profile is telling us. Let's throw fibs on here for a second. Just gotta love all these like massive wicks on everything today, eh? Okay. So, you know, you have this big massive move down, and obviously that was the top. So, you know, it's pretty easy to find your bottom down here. So we're connecting them. We're trying to figure out, using the fibs to kind of guide us, where might this thing go? Well, we're obviously looking for 50%. That's a reasonable place to look as a target. And lo and behold, here we are. And actually we're into a little bit of first mouse, second mouse here, but you know, here's the first mouse trying to break through that 50% level. Takes a little bit of a pause, comes back to the 20, gears up, and is now making another attempt. If you can break through, you know, 618 a possibility? Yeah. So what can we show, right? Well, we're filtering the noise, which is helping us identify the trend. If we can do this over multiple time frames, just aligning past price, because current price is attracted to past, right? That's maybe why the fibs work, right? If the fibs are showing us, you know, areas where price might want to go, and we can scope out this range, why not be long to there? When do you go long? When you get the signal to go long. So just because we're looking at our fibs on the daily copper chart doesn't mean that we make our trade right here. Because remember, we don't have any idea if this thing's going to stop. Is it going to carry on? Is it going to we don't know. right? We just have to let the chart guide us. And as we're looking at it, it's telling us that, hey, there's no reason to push higher yet. The chart's not telling us that's happening. There it is. That's when you make your trade. Or if you wanted to dial this back a little bit on the 4-hour to see if you could catch an earlier entry, you could do that too. I don't think you're going to save much though. But wait to be told that you're doing the right thing, right? All of this, which would turn out to be dead money if you were trying to long it, now you're just waiting. Why? You could be doing other things with that money, right? And instead of making a trade at the wrong time. Your entries are really important because they're going to determine whether or not you're going to get a head start and be profitable. I'm a big believer in good entries. Just getting in for the sake of getting in isn't really that meaningful to me. I'm looking for the good entry. This is a good entry to go long. And let's just take the fibs off for 1 second to make this a little more clear. We know that this upper value range is here. So we know our fib level was here as well, okay? So as you get into this choppy stuff, and you're like, okay, what do I do? Like, buy, sell, buy, do I get out? Do I stay? Well, we know that this is a level of resistance for price, and we know that this is the first attempt, right? Price does what you expect it to do and kind of fails here, and it comes right back to the 20. Right? Bounces, takes another shot at that range and fails. But what you've done here is you've kind of given yourself a very defined zone that price seems to want to move in. Can't break it again to the upside. Right. Next. There's your signal. There you go. This was going to be the second attempt. So when you held the 20, and again, this is kind of having the ability to put all of these things together, and the more you do it, the quicker this kind of stuff will come to you. But we know this is the first attempt to break out of this resistance area. We were rejected. We came back to the 20. I got support from the 20 before, so I'm hoping that I get it again so that I can get a continuation to do what? Take out this previous wave's highs. This is the second mouse, right? This is the one that you want to take out the previous wave's highs. This is the one that should get the cheese. Notice how getting into this gap, makes it easy for price to move up. You break through this level and you get into this gap up here with all this is thin trading, right? Because all created by these big monster candles. So anything could happen if you were to get up there. But really key to get through here. But an example of the fibs showing you a level that you could use as a target above and beyond, moving averages or benches of past price or, liquidity zones, fair value gaps, whatever you're using. We know this. We failed it. We found support off a level that we want to get support at, knowing that if we do that, we're going to get another crack at that high. Fail it, and you're going to come back and take out the previous wave's low. And you've got the 20, you've got the 50 and the 20 down here. That would be a draw for price, and then you've got some gaps, so you want to stay out of those gaps to the downside. But as far as how this moved to the upside, this was a beautiful example. Massive impulse down. Well, that's dramatic. What do we do with that? Well, the first thing we do is throw fibs on it to try and make some sense out of it. Let's just do it quickly once again. Right? Take the wick, lower wick. We're looking for the, that extension higher. We see the 50% range. That's an automatic. Let's put a level there. And you start to move higher, and it's just break one level. There's a 200. You get through that. Now you're through the 50. And here you go. Just overlay, again, this is not a pickup truck full of fancy tools. You don't need that. You just need a decent toolbox with a handful of things that you can use really, really well. And it'll get you to where you got to go and then some. Kind of a less is more thing. What tickers do you have, Rico? Let's throw some up.
Sure. Let's go to the first one that I wanted to bring up because my brother literally just texted me. He's all pumped up because I mean we went into a deep dive. But this one was one that was cool, and I kind of reminded me of one of the ones that you looked up in the past. This one's DNN, so Delta Nancy.
Dennis and Mines, okay.
Yeah. So this is one that's been doing pretty good. But what I thought was pretty cool when I looked at it, the monthly chart, I was like, yeah, you got in as oversold can be. Of course, when you zoom all the way out, this thing is like, where it started off and where it's at now, it's like, but he's over like 1,000% on this one right here. So he's just freaking super happy. I was like, it's still running. We got buy signals on this, daily chart still looking pretty good. And then I got another one after we're done with this one.
Sure. So this is, this company's been around a long time. And a lot of the miners kind of fell out of favor over the last several years. It's not really sexy. It's not tech. It's not this. And it just wasn't a catalyst, I don't think, for that kind of attention and activity. And you can see that this, and I think there were some other issues going on here too, but flat as a pancake, like under $1. Like, wow. Like, when you're buying stuff like this, you're saying to yourself, I could be throwing this money away. You know what I mean? That's when you see a chart that goes from X to Y, Y being the bottom of the ocean. That has to be in your head. I think there's a lot of these I don't want to call this an old economy stock, but things that used to be popular 10, 15, 20 years ago that a lot of you probably haven't even heard of are starting to find their way back into the fray again. And why? Because they have charts like this, a lot of them, where they've just been beaten up for one reason or another, and all of a sudden they get a heartbeat. And you're gonna what I'm gonna do tonight? I'm actually gonna be scanning. I think I'm gonna use my scanner tonight, and I'm gonna look for stocks that have this kind of pattern. Long time.
Yeah, he found quite a few of them, honestly, and I was like, whoa, these are the ones that turn into runners out of nowhere because they just get a heartbeat and they're doing good. I'll send you another one. Like I said, I got a list of them, so there's
a lot of upside here. So I think the next level you're looking for is that 370.
370, yeah.
Up to the left, and then from there, just to go to the weekly. Yeah, you're 419 maybe. Way back up here. Like this, if this thing lights up for whatever reason, there's a tremendous amount of upside here. So, and there's lots of ways to play this, but the weekly looks super strong. Again, clean signals. I love green candles at the 50 that print a signal. Buy every single one of them. Okay, so because they usually turn out to be nice trades. But yeah, wow.
Another funky one more funky looking chart.
Yeah.
And then I'll do a good looking chart. This one is 4 U's. So umbrella. Okay. Same thing with this one. It just kind of came out. If you go to the monthly chart, it was just something that was forgotten. I don't know how he found all these, but now even on the monthly chart, I printed a buy signal. It's like looking really good and just got a heartbeat now. I was like, man, I don't know how you found these runners, but they were dead at some point, but now they're coming back to life.
Yeah, there's your weekly.
Crazy, right?
Yeah.
And I don't, he's just now it's all this massive breakout. He has like, I don't know, he had like 10 trades. He had way too many tickers on this thing. I was like, bro, you bring that number down. I was like, granted, you're winning on all of them because you got in at such cheap prices, but
you're not a hedge fund manager.
Yeah, yeah, like over 10. I was like, whoa, bro, I don't know how you're doing.
This is really kind of, nice. This is the one thing about charts like this, when you put them on your screen and you try and condense them or whatever, it's hard to do because they've been so flat, and as soon as you expand them, it looks like price has been jumping all over the place, but it hasn't. This is just an example on the weekly where you do get a signal, right? Had this kind of impulse wave down, and then this big green candle. Your signal clicks here a couple weeks later. So this is your insurance, right? This is the insurance that you're paying to make sure you're on the right side of the trade. Believe me, before this prints, it may, there are times that oh yeah, it looks like it's going to take off, and then all of a sudden it rolls over and doesn't print at all, right? So, we're only seeing it after the fact, but it gives you your signal, and boom, like literally boom. And all of this kind of exuberant price action will scare the pants out of a lot of people that just say, wow, that was my hitter, I'm going to take it off now, which is fine, but just understand, if you had this tool, you'd know that you'd be leaving a lot of money on the table. How much? Who knows? You don't know what comes after that candle. Is all you know is that this is one big uptrend. And to take it off up here, you'd be doing yourself a disservice because the trend was still intact. And I think people probably leave more money on the table than they put in their pocket, just by not understanding that there was value in staying in the trade because the trend was still there. And yeah, we show multiple time frames, both, short and long time frames, but you would just adjust your trading accordingly. Even this doji on this thing wicked the T line and shot up. So, that said, that's still a bullish, putting the ish in quotes, but that's still a bullish chart, right? Like, okay, these could just be red candles in a further uptrend. Do you want price to fall into this gap? Not at all, because if you do, it's evident what it's going to look for to the downside, right? The downside risk on the weekly chart is failing here, kicking off a trend down with this gap beneath you, and you got the 20 sitting there, and then the 50 and the 200, and then the point of control, which is this basic shelf, as an also as a draw. So you don't want to lose the support here. And look how far away you are from the 20. Like, you don't want a big massive retracement to the 20. I think this sticks a little bit. Maybe you bounce. You could do one of these, right? And create those two equal tops that make you have this conversation all over again. That would be the second mouse up here, if it was to do that. This is kind of, I don't want to say it's the first test of the T line. That's not what I'm saying. But I mean, this is a pretty big move down that did get some support. But I don't like the momentum indicators on the weekly. Like, yeah, the stochastic RSI, as you can see, can stay elevated well above 80. This is well into the 90s even. And price continues to rise. It's just telling you the buyers are still in the building. But that's a nice chart, for sure.
Got one more for you.
Yeah.
This is the one he just texted me. This is actually a nice looking chart.
Okay.
This one's Charlie, Juliet.
Cameco?
Yes.
Okay. He likes his, the minerals and all that stuff have become pretty popular. It's, everywhere you turn or listen, someone's talking about rare earth or refining rare earth mineral, all that kind of stuff. So the miners have drawn a lot of attention, but hey, let's take some of the noise out of this. This is the chop. It's like another example of, let's go to the monthly. There you go.
Look at that, how beautiful those buy signals are right when they're crossing the 50 moving average. I mean, it don't get no better than that, blood.
No, so I think absolutely. I think the takeaway from this, and a lot of it, I'm going to credit you for drawing attention to the longer term charts, but using all the same principles that we use, these, like, we're always looking for buys off that lower value range, and on the monthly chart, those things seem to really be big
Valid.
winners. Yeah, like
Yeah.
big winners. So, you're going to have some trading moves in here. That's going to happen. But you know how to manage this, right? Like, okay, there's your signal. You know the 50 is going to be resistance.
Right.
That's a strong probability that it's going
Right.
to be resistance. It was. You could have easily washed that and made some money there. But I mean, price comes back to where you hoped it would and stuck that lower value range, and then you get another opportunity to long it. Well, that's okay. This is the one that runs. But these are going to be trading moves, right? One of them, however, will break out, and I think that's kind of what you're seeing now. And these are massive breakouts. Like,
Yeah. Look at that. That's just awesome. Yeah, I mean, once he seen the monthly chart, I was just sending him pictures and stuff because we were just talking. At every picture I sent him, he was like, "Okay, well then look at this one." I was like, "Bro, yeah, what we spent 2.5 hours on the monthly chart, just zoomed out, like just it's like." I told him, I said, anybody can make money in a long market, in a bull market. Charts going
Yep.
up big. Yeah, that's good. I said, I'll know, and I'll give myself my own little medal or whatever, my own little thing
Yeah.
that when the market's done, to be able to call the top. And I think this monthly chart is going to give me a really good indicator because it's like I don't want to be around for a long ride down on a monthly sell signal. Those
Mm-hmm.
things move for a long time. I don't want to be 3 months locked up in the trade, right? So
Yeah.
it's pretty powerful, man. It's pretty powerful.
Here's another one. This is Exxon. Going back to February of 21. You can see like this big, massive move down. But there you go. Here's the insurance. There's your signal, and that came at around $45, and now you're at 115.
And I want to say something real quick right here on this one, Blunt, about paying insurance. Just leave it right there on the monthly if you
Yeah.
can. So like that buy signal right there came out, but like a lot of times, it's trading against the 20, it's trading against the 50. Like you could pay your insurance, get that buy signal, and say, hey, I don't want to get into a trade on the first pullback that it holds support against, like let's say the 50, just because I feel more comfortable on the 50, or maybe it's the 200 for you. But even if you would have waited, like let's say that buy signal, and your entry was the first candle that held above the 50, you're good, or the first candle that held above the 200, it's still a profitable trade. So there's levels of like where you can like almost pay this insurance where like,
Yeah.
because I noticed trading against those moving averages, like, and I got this from you, like, like trading into them, that's really hard to do. Like if I get a buy signal that breaks the moving average at the same time and it's like rolling everything over, I like that one. But if it's underneath like the 50, I'll sit it out and just wait for it to actually break the 50. So like that's not one of those that just flicker on and then flicker off type of deals.
Yeah. I think I was, so I, as you guys obviously can tell, I put a lot of stake into the T line and this filtering and triggering that it gives me. And there was a time when I would focus more on candlesticks and price, which I obviously still do, but I wasn't using this methodology, right? And without having this here, I honestly felt like a fish out of, now that I look back, like a fish out of water, because I didn't have anything to tell me, okay, this is a good entry. I just didn't. And I was focusing on the candlesticks more than I was the trend because I couldn't see the trend clearly like this. Like, yes, after a while, it's obvious the direction of price, but I mean, I couldn't see it as I do here. And I would, see that this candle as an example, which clearly looks like a reversal candle, doesn't it? Right? It's really hot. Look at all this gappiness here, which tells you it's exuberant. And I would see that candle, and I'd go, oh, that's a reversal candle. I'm out. Again, this could be an hourly chart, a daily chart, doesn't matter. But now I'm like, well, I can see that divergence to the upside. I can literally see the direction of trend. So here's again, right? Impulse up, sideways, right? These are just red candles. Again, if I take this off, if I was to see that, I'd be like, oh, no, no thanks. I don't want any part of that, right? That's, breaking. I don't like that at all. Throw this on there, and I'm like, huh. These are flush candles because it's holding, right? And I'm still diverged to the upside. Oh, how about that? Just see, it takes all of the stuff that stress us out, and I say us because it includes me, is all the thinking you do on an intraday level that clogs your head, right? It just clogs your head with stuff that may or may not be relevant. The only thing that's relevant is the trend, the direction of the trend, and obviously price. That's it. Everything else is just stuff. We make too much out of things that we probably shouldn't. Let's take a look at Walmart because it's down today when everybody else is up. So you're running kind of hot. You can see you're starting to lose some momentum. Like you can literally see. Let's take these candles off because the candles are going to cause you anxiety. Right? Hey, move up, move up, move up, move up. Whoop, what's happening here? And there's your signal. You don't need the candles. You know what I mean? You can literally enter without them. What's Walmart looking for? So we broke the upper value range. We're looking for past price. We know that the point of control, this thin red line, is the most dense average of all that volume. And there's the lower range, this being the upper range. What did we fail? There's your signal candle that's appearing at a major moving average. So, I would still take the signal. The fact that you broke a major moving average that has been, should be support, is not good. What's it going to look for? We just kind of overlay the next level down. So we broke one level. Right, there's your yesterday's candle. We broke one level. Whoops. We're looking for the next. And there it is. And look how it was acting as support. When you come back to test the 50 again, are you going to get a continuation off the 50, or does it break the 50 and start looking for the next level down, which is the 200? And where does the 200 sit? Lo and behold, right in here with the point of control on the volume profile. So you can kind of see how we get to our targets. It's just a simple matter of overlaying these handful of tools and understanding the rules that we have. Right? Are you trading above the 20, the 50, and the 200 on Walmart's daily chart? Yes. Right? That's totally copacetic. Just understand that at certain points in time, you're going to come back and check those levels. Sometimes they hold and sometimes they don't. This is an example of one that didn't. And as a result, it's going to look for the next level down, which is the 50. And if it doesn't hold the 50 this time and falls into this gap, you can be sure that time and price will come together and it will find past price where it's been before, and it can sit down and where buyers and sellers have shaken hands in the past. The probability of that happening to the downside, if price gets into this gap, is a lot greater, because there's nothing here to hold it up, unlike these shelves or where the POC is. Doesn't mean it's going to stick there. It's just a target for now. We've broken one level, we're looking for the next. If we don't hold that, we fall into the gap, and boom. That's what you'll find. Any more tickers that you want to look at?
I got a couple of them if you want to check out. We can check Umbrella Romeo Alpha.
Uranium. Okay. So
these are my brother's stickers that he's up like crazy. I'm proud of him. I don't know how he's doing it. He was like, I'm just using my fundamental. He was like, the fundamentals are there. I was like, all right, bro. Hey, I'm a technical trader. I'm not gonna knock. There's more than one way to peel a cat. If that cat's being peeled, do your thing.
Yeah, look, I think all of the the metals and the minerals have been a hot topic. So that's going to draw a lot of eyeballs from other investors, from other traders, right? But I'm not so much interested in the eyeballs. I know that because this is a hot topic, those eyeballs are going to go to those places. What I am interested in are the fingerprints that the people that have those eyeballs make, right? The fingerprints of money. And that's what we do, right? We identify the fingerprints of money. You can run, but you can't hide. We are always going to see what you're doing. Maybe not. Well, I'll give you an example. I think it's AMD. So AMD broke out back here on the 5th of October. So whether it be minerals, stocks, commodity, it doesn't matter. We are here to track the fingerprints of money. That's what we do, right? Somebody had been buying AMD quietly until they couldn't hide it anymore, right? So we got a signal on the daily AMD chart. So here's the signal, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 10 days before. What did we see that other people didn't? What we were able to see is the outcome of that money slowly coming in. Like, why did it trigger a signal? Because there was enough momentum to do that. And I think what's this, obviously there's people trying to slowly accumulate this stuff or quietly accumulate it. There's no question in my mind. But we can see the fingerprints of money. We can see that divergence start to open up, telling us that, hey, there's something going on here. But we saw it 10 days before, not just the day that it happened. It's too late here. It's not too late back here. So it's again, the fingerprints of money. that's what we get to see. And here's that uranium chart. This is the daily. Go to the weekly, take some noise out of this monster. You know, like you're talking of going to like $100 a unit to 15, 13. Shit, 10, 7. That's crazy. But ultimately, with stuff speed up like this, I think it does make sense to use the monthly chart, because it's gonna, if you can get a buy signal on a monthly, there's enough money coming in um, to make it worth a look. But again, there's, that's the one I like right off. You got right off the 50 with a signal, right? And yeah, there was trades. These were trades, right? But you're getting support before you actually get the lift off. So, nice move up, a little bit of a retracement. So it's obviously not ready yet. Another move higher, not ready. Break the 20, get support from the 50, and then boom, this time it takes off. These areas are where your action's going to happen, up or down. Where does this thing go from here? I don't know. Just got to start looking to the left. I think you're going to look for the 65 level. You're going to look for these areas to the left here where you can start to average out tops and bottoms. And again, this is really rough, but that's what I'd be looking for. Nice. There's probably a lot of minerals like this, or rare earth things like this.
He almost had them all. I'm telling you, I have a long list right here. I just don't want. I know, we talk about crypto a lot, but I was impressed with the tickers. I was like, dude, just give me every ticker you got at this point. Like, if you got any other ticker that is literally rolling over on a monthly chart like this,
There's
because
another
there's another one. Yeah, because on the if I'm so, if I believe that this is very fractal, and I know that I can apply this to BNB BTC, and I'm so excited that I could have called BTC at 22,000 with that monthly buy signal. But I'm seeing all these rare earth minerals. And, last week we were talking about that as well, where it's becoming a new trendy topic, right? And it's like we might be seeing where these monthly candles might turn out to be some runners for us. But, yeah, let me know if you want another one before. I'm not sure.
Yeah, sure. Let's.
Okay, let's do this one's just the next one is Nancy X-Ray Echo.
Okay, next gen.
We're gonna go to my brother for all commodities from now on, and the energy sector is where he lives.
Yeah. So this is it's kind of interesting, because when you look at oil, it's just been beaten up. Like
Yeah.
the core commodity itself.
Yeah.
Had its teeth knocked in, but hey, there's a lot of stocks to play. I don't understand the big, like, there's no correlation anymore between the stocks of energy companies and the price of the core commodity, it seems, but maybe that's adjusting itself. This chart's pretty bullish. A lot of the move has obviously happened, but where does it go from here? I don't know, man. You're going to get into some price exploration here soon. Where does it pull back to at this point is what I'd be wondering, because it's probably due for a retrace. So, like, I wouldn't buy it here yet. I'd be waiting to see what happens after this. But it's a bullish chart.
Yeah. Here goes another one if you want. It's Oscar Umbrella Sierra Alpha.
Was it Sierra or Tierra?
Sierra.
So OU. Oops. S. What was the last one?
SA.
OUSA. Okay.
which is pretty catchy. Oh, USA, you know. Yeah, I don't know how they're finding charts like this, but I told him I was going to call the SEC on him if he kept showing me charts like this late last night. I was like, oh, yeah, I'm calling the feds on you, mister, for sure.
Yeah, it's
That's fun.
this thing's just ripped.
That's actually a very bullish chart.
It's done everything. Like
So,
when we talk about how price moves and how these breakouts what they look like. This is as textbook as you're gonna get, and this is a monthly. You've got nice moves higher, reasonable retracements, moves higher, reasonable retracements. Like this is kind of healthy ebb and flow. This is obviously a very bullish move, and even with that big nasty candle from a while back, you regained all that super quick. So it's a bullish chart. Where it goes from here, I don't know. Like,
so, just a quick question. You know the blue line at the bottom where it's got one, two, three rejections off. Is that the
that's the
what moving
50.
average is that?
That's the
That's
50.
the 50.
Yeah.
So that's 50 on the monthly.
Mm-hmm.
Okay, cool.
Yeah.
Like you say, price likes to come back and revisit the moving averages. So
Yeah.
the
So
fact that you got two rejections off that bad boy means price eventually don't buy right now. Just wait for price to come back into some point.
yeah, like it's shown that it does it before. It's just yeah. I think it's. I'm not saying don't buy it. I just would wait a little bit of a pullback,
Yeah.
and where it goes from here, who knows? It's all price exploration from there. So,
That's what I was having so much fun. I was using so much of your terminology last night, and I was having so much fun. I was like, I can't believe how his thing is not filled up. I was like, I take advantage when I'm up in there. I was like, you don't see me asking questions left and right. I was like, because it's like, how could you not just absorb this information right here? We're giving you the thing that you need,
yeah,
and some of that terminology keeps you out of trouble because you don't know how high it's going to go. That's what he kept asking me. He was like, where do you think it's going to go? I said, I don't know. We're following the damn treasure map. I used to think that we could know.
yeah,
I was like, but where do you want me to snatch these prices out of? I can't snatch them out of thin air. I was like, but I can help you follow and manage the chart, like manage your trade and follow the chart. But I can't tell you, I don't have Miss Cleo's crystal ball. I don't know where it's going.
yeah. It's what we do is we just kind of use past history and again, history repeats itself, right? We have enough of that to have a real good idea where things may go. Um, like just this
You know
Bitcoin
what I
weekly
like?
chart. This is the 20 MA, and that big pullback literally wicked the 20 MA at 830 and bounced. So when we talk about, hey, you know what, sometimes it makes sense to have just kind of outstanding buy orders in areas that you think are nuts, and they may not get hit, but every once in a while they do. This is kind of an example of that. If prices to pull back
Um,
on a weekly, break all this stuff, its first area of support is going to be the 20. Just like if we showed you the XRP daily chart when it rolled a couple weeks ago, and I'm not picking on XRP. Where did XRP go? 1000 AMA.
It's a bit like gold as well because I've been keeping my eye on
Yep.
gold. And if you go on gold on the weekly chart, because obviously gold, JP Morgan predicted that it's going to go to about 5,000 an ounce, and it is heading in that direction. Now, if you go on the weekly chart, you can see that gold is trying to find the 20 EMA, and I've got buy orders waiting at the 20 EMA. So the
Yeah.
20 EMA falls at around 3,460 per
Yep.
ounce. So I'm just
And
waiting for that bad boy.
and
So
that they
I'm
might
short
not
in
get
gold.
hit. That's the other thing. Like
Why not?
you just
Yeah.
don't know. But I agree with you. Like
Yeah,
Where
I've
would
got
I?
I've got a few trades that I've already taken profit. I've got two more positions open on gold
Mhm.
that are still in profit
Yeah.
that are heading towards the 20 EMA because that's my
So,
target in the weekly.
yeah,
So it's gonna take a while to play out, but
with all the drama that you've seen in, like, if you look at gold's daily chart, that's,
mm,
a bit of a dramatic pullback based on the run that it's had. But it really didn't have a
yeah,
retracement. It only had 2 days of red candles that whole time. But I mean, on the
yeah,
weekly chart, is all you did was wick the T line and then shot back up a little bit. Like, obviously, this candle's not nearly closed. It could close below the T line. Who
mm,
knows? But I'm saying right now, it's holding trend on the
yeah.
weekly for now.
I think like with all the momentum it's had on the 20, like rejection of the 21 or 20 moving average, like you said, um, price eventually will go back to the 50 and back to the 200
Yeah.
before it continues climbing back up again. And when you go like you move into
It's
the left,
just,
you can see that it's
yeah.
tapping them areas.
There's just
So
this ebb and flow
I've got,
of price.
yeah,
Yeah.
I love moving averages. Like trading with moving averages, honestly, has made my trading life so much more easier. Because
It, it,
oh,
it gives you
I love moving
easy targets to look for. I think ultimately that's
100%.
what you're gonna see. Solana's
Like
another that
if
we look at
you
pretty regularly, right? And doesn't look much different than Bitcoin.
Nasdaq
Nice.
is moving crazy
It
at
was
the
a nice.
moment.
Go ahead, bro.
No, no, I was just saying Nasdaq is moving crazy at the moment. It's got major gaps, but it's not looking like the momentum is slowing. It's nowhere close to the 21 moving average in the weekly. Like it's crazy right
Well,
now.
let's look at this is Nasdaq. Actually, let's look at SPY or S&P because I can put the volume profile back
Yeah,
on.
it's moving crazy
Yeah.
right now.
So,
What are the chances that it's gonna come back? I think it's gonna come back down, but
well, eventually it will calm itself. But I
yeah.
think for me personally, and we're not. This is just an opinion. Um,
That's
I get pretty uncomfortable watching these markets just go straight up like this without
yeah.
any sort of um, the economic backbone just doesn't seem to be there. So, this is just um, people using the market to manufacture money. We don't manufacture
Mm.
things anymore. We just use the market to manufacture money, it seems. And that's probably what's going on. But, this too will end someday, right? All of this exuberance, all of this, price only go up, will end or will become less effective, whatever. And when it does, we will price will come back and check all the levels that it always does. It will just feel incredibly extreme.
With Nasdaq and gold and things like that, whenever I see them moving up like this, um, because I'm training myself to short the market as well. Like that's what I'm focusing on. Because in the past, all I've done is buy, buy, buy. But now I'm about shorting the market, and when I see this is just me,
Yeah.
when I see the market move up like this, I love it because it means that okay, at one point it's gonna have to retrace back to the 20, the 50, or the 200, and at best the 1,000. So whenever I see them moving like this, I wait for the momentum to stop. Once the momentum stops, then I short the market.
Yeah.
And I like with gold. Gold has gone up like crazy. Everybody's chasing the run, but when you chase the run, and especially when the run is finished,
Mm-hmm.
now it's a good time. So, like I said, I got a few positions in gold that I've shorted on gold, and they're moving beautifully because everybody's chasing it, and yeah, the market, the momentum
buying
has
gold.
stopped. Like, look, you've got. It's now breaking character. It's trying to get back to the 20. So I've
Well,
got targets on the 20, 50, and the 200.
yeah. And like I said, it could also hold here and
Yeah.
bounce and then kind of create a double top look, and then everyone will be having a different conversation. But no,
Yeah.
you're right. Like there's going to be opportunities here. It's just allow the chart to guide you through
Yeah.
that process. Like here's BNB. Just go to the daily.
Yeah. Like BNB is reacting
Uh,
off the 50,
so
and see on the weekly, you
yeah,
can see that
just
it's just touching 20, so it could reject
yeah,
that, or it could be lower.
yeah. I don't want to. I wouldn't get. Don't get too into the weeds, Mike, on where it may or may not go. Like just be aware of those levels and just let the
Mhm.
chart guide you. Like this weekly BNB chart, green candle, signal, 50 MA. Buy those all day long. Right?
It's
Little,
Yeah.
crazy.
a little bit of a pullback here. Here's your second mouse, right?
Yeah,
But your
yeah, for sure.
trend never
Yep.
broke, and price just went nowhere but up. And even now, even after that terrible week a few weeks ago, you're still trading above the T line, above the 5 EMA. You can see these wicks being pushed up. Those are buyers pushing price higher. It's still a bullish chart.
Yeah.
The monthly, what was the guy? I
There
didn't
isn't
look
a
at
lot of
when did the monthly say on B&B to buy
Uh,
your masterful? I told him, I was like, this indicator is like a wizard. I'm telling you. Oh, it's not even on there.
yes, it is.
Oh, right there. Yeah.
Tw- uh, February 24.
You would have
days
had the
or
SEC at your door.
Which is like you can
How
even
did you know?
see, like, I'm gonna start doing this a little more frequently, but like you can see here even, like you could have taken that.
Yeah, you could have taken that one. Yeah, it broke the T line and the 5 EMA crossed over, but man, you want to this is this monthly chart has been a real big eye opener. But yeah, I'm looking forward because like break the chain what FX was saying, and like Blunt was saying also, like don't get lost in the weeds. I love his little phrases, and I'm not planning on getting lost in the weeds. I'm just going to follow the chart. Now when I see a sell signal on the monthly chart, and my attitude's going to change, and not because
Yeah, for sure.
not because I just want to have a bad attitude, but just because when I look at prior price and the how valid this monthly chart has been on, it doesn't matter what you look at. It's like I'm telling you, you would have the SEC at your door. Like, how did you know to buy B&B way down there? I said I
two.
was talk to Blunt. Blunt gave me this indicator that told me to do it.
Well, so I don't know if I told you guys this story or not. We've been in here for a while, so I'll close with this. So the very first training course I had, my teacher's name was David Steele Smith Elliott, and I kind of credit he and Stephen Bigelow for the bulk of what I know. And Stephen told a story the very first day of this class, and he obviously was a retired trader, and he worked out of his home. He had his trading set up in his basement, and it was kind of his domain. His wife never really came downstairs when he was working and things like that. And then one morning, she opened the door and called downstairs and said, "You might want to come upstairs. There's something you need to see." And he thought, "Oh, geez, that's something going on. I got to pay attention to." He had no idea what she was referring to. And leading up to that time, as a trader, he looks for those. Remember the fingerprints of money, right? Like we're interested in what money does, not what people say. And he had been noticing a lot of call volume in gold. So what did he do? He followed the market, and he started, buying call options on gold. Also noticed there was a lot of put interest in airlines. So he followed the market and started to buy puts on airlines. And he did a few other things with some commodities, all the market telling him that something was going on. So keep that in the back of your mind. So now he walks upstairs. She walks into the living room where his wife's sitting, and she's got the television on, and the Twin Towers are on fire. And he said, I nearly threw up in my mouth, because what he realized is that the fingerprints of money that he was observing were most likely terrorists preparing to monetize the event.
Wow.
What did they do? They bought gold and they shorted airlines.
Wow.
And this is common knowledge, right? There's more than one
Holy
story
cow.
out there like this. And David did the responsible thing. He's passed away now too. He called the FBI. And he was a personality that was known. We would see him on Bloomberg or CNBC at the time. He was not an unknown personality. And he was interviewed by the FBI 3 times and audited by the IRS probably 3 or 4 times after 9/11. Never heard anything after the interviews. But he was just basically showing them that whoever did this with the intention of monetizing the event, and here's how they did it. And I don't think he was the only one that probably presented that kind of an outlay to them, but it's quite clear. Bottom line is, we're interested in what money does, not what people say. The fingerprints of money is what we watch, because it's our guide, right? You and I in this market are not even the flea on the fly's back of the cow. Like, we are so freaking small, it isn't even funny. We have no opportunity to move anything. But we can drift the people that do. And that's what we're doing. These people were buying Bitcoin, so what do? We're just going to pull up right behind them, and we're going to drift.
I like that.
Right? That's all we're doing.
Right.
Somebody always knows more than you. Right? Why were they shorting airlines? Well, they were shorting airlines because they knew something was coming. Why were they buying gold? Because that's a risk asset. Blah, blah, blah. Right? So that was a real thing that really happened, and I'm sure David wasn't the only one that pointed it out. But I'm just trying to demonstrate the fingerprints of money. It's what money does, not what people say, that we're interested in.
That's crazy, wow.
If we listened to what people were saying about oil, we would have been buying it like crazy since nearly 95. But that's not what happened. The narrative was such that, yes, price go up, should go up, but it didn't. It continued to fall. So there's something else going on that we don't know. I don't really know. I don't know what it is, nor do I really care. The only thing that's important is that you have the ability to track the trend so that you know the direction of price. And then we overlay our other tools like we've shown to help guide you through setting targets and determining when whatever you're riding is done. And right now, this is not done. Not yet. One day it will be, but it's just not today. That's all we're doing here. Try not to complicate this more than it already has been. And I think that's our downfall, right? We go down rabbit holes. We try and we overwhelm ourselves with information. And then when we sit down at our screens, we're like, oh my God, I feel like I've been in a blender. Right? So you just got to exhale, take a step back, simplify kind of what you've got going on your chart, and then just overlay those handful of tools that we use with a solid understanding of how price moves. Current prices revisiting past, the volume gaps, create opportunities, all of that stuff. And you'll be able to pull it off. Here's your 4-hour Astra chart. It's still got a heartbeat. Not giving us anything on the daily yet, or sorry, on the 12-hour, but you just wait for the go signal. If you thought this was going to take off on the daily, if that's really what you were looking for, an entry on the daily on this thing, the 4 hours is going to give you your inside look of that candle. Remember what
A
these
cool question.
are. Yep.
I got a cool question for you. Like, okay, let's say somebody might be in here and stuff. Like back on the Aster chart, you were just looking at the
Okay.
4 hour chart. You like you said, you're looking for your entry for your daily, and your 4 hours printing this buy signal. Are you waiting, for this candle to close completely? Are you waiting to see the next green candle, or right when you see this arrow, you're saying, you know what, I'm all in on this one.
So
Just for somebody who's probably seen a signal and stuff, are you waiting for candle closes and then the candle after that? Are you doing it during the candle on your entry?
So the straight answer is it's going to depend. I don't, I have we have a handful of rules, but do I bend them sometimes? Sure. So if I'm looking at if I'm looking for an entry on the daily, I am going to look at the 4 hour. I'm also, in all likelihood, going to look at the 1 hour too. Because if I'm going to be wrong, I might see on the 1 hour, I'm looking for some resistance here is what I'm looking for. I'm going to have the 1 hour up, because if I'm going to be wrong, chances are I'll see something on the 1 hour that might give me a reason to pause, right? But so I'm going to look at Aster. I'm looking at the 1 hour. This is still a bullish 1 hour chart. I'm thinking my target is this upper value range, certainly. And you can see there's a bit of a base and bench here of price. With ultimately, you're going to want to look for this other high at 121 or whatever that is. So I can feel good about my 1 hour chart. I'm not worried about this sideways action here. I interpret this as an impulse up, and these candles hanging up here, they're waiting for the T line and the 5 EMA to catch up. And this could be an opportunity when that does happen, that you re-enter the long. So this is the impulse up, and then it'll go sideways to meet these levels, and then that could be another opportunity to hit it long. So I feel good about that. I can see my targets. When I go to the 4 hour, that 121 or whatever I said it was on the 4 hour, here's the 100 MA on the 4 hour that's at almost 121. So I actually feel pretty good about this level. So I'm feeling more comfortable that, okay, I could take a run at this. My daily, if I can get there, we're trading now a little bit above the T line, and this 20 MA sits at 122.87. I don't have a signal here yet. My 4 hour does. I can identify levels that make sense. Remember, everything's fractal, right? So we're using these time frames. It's fractal analysis. When I get levels on the daily and then on the shorter time frames that align with trend, I would be inclined. I think I would take it now. Like, you could take it now. Again, I say that without knowing, like, is this going to be leveraged or not leveraged? But I'm saying, if you were spot, I wouldn't see any harm in taking it now. Because I think
it's looking like it's finally doing. It's finally going to produce that.
Yeah.
We'll see, man. We'll definitely see on this one how it plays out. But it's man, I think the higher time frames, this was an epic session. I'm going to say it again. If you guys were listening in on X, give Blunt a follow. Make sure you guys, spam the comments as well. It helps us grow. If you guys want to help your projects from panic selling, this information can help them out, because then they'll know whether it's just a pullback, a correction, or a full blown sell signal on the monthly chart, and we gotta dodge.
Right. And that's going to give you understanding what's going on the chart is the best thing you could do for yourself, is getting the knowledge to understand, because without it you're always somewhat panicked, right? You're afraid of what you don't know. That's the biggest part of about learning a lot of this stuff, is the fear of not knowing, right? You can start trading without any kind of structure training at all, with any structure behind it to help you with risk and, setting targets, and it's a challenge, right? And you're always scared. It's like when you go to the car dealership. Nobody wants to pay too much. Nobody wants to be that person. So what do you do to not be that person? Well, you educate yourself. What's the average price of these cars? What's the blah, blah, blah? There's ways to protect yourself, but you got to learn. Right? The script that we use gives you the opportunity to hold 9 major moving averages, and you can alter them whenever you want. So the way that I trade is with a T line, which is the 8 EMA, and the 5 EMA is kind of one of my triggers, right? I obviously put these in the first field. I'm kind of showing you inside here. Then I have the ability to run all these other major moving averages. So, TradingView is great, but if you don't have the premium one or the upgraded package, you're going to be limited on indicators, and this helps a lot, right? So you'll get 9 major moving averages, the volume profile that you see us use all the time. And these moving averages, by the way, if you like simple moving averages, you can set them to simple. If you're a big believer in using EMAs, a lot of day traders do, you can set EMAs in these fields. There's all sorts of moving averages that you can use, weighted moving averages, VWAP, they're all there. And that's built in to allow, if you have a different trading style and maybe you use different types of moving averages for different reasons, you can do that. So there's all kinds of stuff in here that you can take advantage of, whether it be signals, like we're just using the signals for the T line and the 5 EMA, right? Because that's how I have it set. But if you wanted to change the first field to a 3-day EMA or whatever the heck you want, you can. Right? That's all up to you. So you got 9 moving averages, the volume profile, and you can set signals and alerts on any set of them. But quite honestly, I like to use the first 2. That's the way I prefer to use them. But you can use them for all the different sets, and you can trigger what sets them off differently as well. So there's tons of flexibility in here as well. So you get 9 moving averages. You'd only be able to probably load, was it 2 or 3 indicators now on some of the shorter packages for TradingView. So this is a great way to have everything that you need to have this system working for you, including the signals, which I think are key. Right? This is how you stay out of trouble. Just do what you're told. Don't get too worked up about the science that everyone claims to know and use in markets, and someone's always got some hocus pocus stuff that's going to solve all your problems. Everything you need to know is on the chart, and we make it real easy for you to follow it. Right? That's really all you need to know. If you want to just hang around and look at daily charts, here's a daily chart of Firo. There's your buy signal at 61 cents. You're at $1.50. And that was when? September 30th. We just do what we're told. Right? Get good entries and manage your trade from there. But it's all about getting good entries, and that's what the script does for you. Gives you the good entries. Not just early, but safe.
It looks like the Aster chart. Like if Aster broke out, that's what it would look like.
I know, right? This thing's gone nuts, and so is Zcash, right? Like,
yeah, Zcash is, oh my God, Blunt. I don't. My bad. Yesterday I was reading all these articles. I was like, dude, me and Blunt has been talking about this so much. Zcash is going crazy.
Yeah.
There's all these articles on Monero and stuff. So we might be seeing this where we need to look at all the privacy coins and see if there's any buy signals on the higher time
Yep.
frame and just set it, forget it.
So a few months ago in this stream, we talked about, what's going to be the next thing. And I said, I believe it's going to be privacy coins. And I think we're starting to see it now. Like all the stuff that we talk about and hear about, like, when you go to the grocery store, do you open up your wallet and show the cashier all your cash before you pay for your groceries? No. So why do you open up your crypto wallet for the world to see? Like, to me, that doesn't make any sense. Maybe I'm just an old guy, and that, but to me, it doesn't make any sense. I'm all for the technology and blockchain, and I get all that, and I'm all supportive. But do you not have any right to anonymity? Like, I don't show. Did you show your bank book to your friends and family and people that you meet on the street? Of course not. Like, not everybody's a bad person, right? Most of us just want reasonable privacy, where we're not being scammed or exposing ourselves all over the place. And that's what a lot of these privacy coins address, right? That's why I think they're popular. Some, like Monero, have been around for a long time, right? There's the Monero chart. We've looked at this a lot, obviously, because we've got it marked up, but getting a bid again. And the other one is Xano, another one of these privacy coins. Xano's privacy, so Monero is privacy by default. Xano, if Monero was like a complete blockchain and not just a coin, it would be Xano. Like, Xano is privacy by default. Basically works off of that ring signature technology plus a couple other things added. I think Zcash has the ability, some of them are not privacy by default, right? But I know Monero is, Xano is. But I do think that's why they're getting attention. But man, like, they sure popped. So, but listen, I'm glad to have you in again, Rico. I'd love to come back on your stream as well. We had fun that day, so I'd be open to doing that again anytime you want.
Yeah, let's do it this Wednesday. I actually had set something up with somebody. Going to do a stream with them today in about 30 minutes and stuff. But yeah, tomorrow I had told them that Wednesday I'll be doing the live stream with you. So yeah, if you guys are listening in and you guys want to hang out and get some more information, and where I'll do my best to squeeze more info out of Blunt, come tomorrow to my live stream at 3 p.m. Eastern time, where we go live. We have some fun. I do some B&B giveaways. And then we can just vibe together. And I'm paying to absorb this knowledge, which is crazy, but just pull up tomorrow. I'll pay you to learn for some reason.
You know what? No one's going to take this away from you guys. Like, and I really mean that sincerely. And it's one of the things that was told to me when I first started. And, because I was so overwhelmed when I first started, I didn't appreciate it. And I'll have to be honest, I didn't feel like I was learning anything either in the beginning, because I struggled a bit. But once it starts to sink in, you will realize that, holy smokes, I have the ability to sit at home in front of my computer a handful of days a week and make a handful of trades and actually make money, not even thinking about it. I didn't think people could do that. Like, what do you mean make money while you sleep? That's, sounds like a scam to me. No, that's my favorite thing in the world, is to make a trade at night, put a stop in, and an exit target, and to wake up and see where we're at. Listen, you're either going to be stopped out, hit your target, or you're still live. We don't have to make it hard. You do that to yourself. Keep it simple. It's a lot more fun that way. But yeah, let's pick this up on Thursday, kind of see where the market's leading us, and we will go from there. We're kind of in purgatory between some of the ranges that we had set before on Bitcoin, but we'll see what happens with this doji. But let's connect on Thursday. Rico, yeah, get in touch and set tomorrow up. I think we should be good. What time is it? 3 o'clock?
Yeah, 3 p.m. Eastern time tomorrow.
Okay, yeah, I'm good for that. That works.
Yeah, that'll be fun.
All right.
And, yeah, well, like I said, if you guys are listening, there'll be a giveaway. So pull up tomorrow, 3 p.m. Eastern time. I'll be doing some BNB giveaway with all the BNB hype. Why not get some of Rico's free BNB? So make sure you guys pull up.
Yeah, Rico knows how to do it. He gives all the good stuff away. Don't miss out.
Don't miss out.
All right, guys. Listen, thanks for stopping in. We'll see you on Thursday. And Rico, you and I will do this again tomorrow. So if you guys are around, join us tomorrow at 3 p.m. Thanks a lot, everybody.